People have been asking me where I am in my videos lately. They want to know where I'm at. So today, I have to just tell you before we get into the video that I am standing in front of the former mansion of Metallica's Lars Ulrich. He used to own this house right behind me here, and many amazing Metallica songs and riffs were written right in the basement of this house, and it has a beautiful view of all of the Bay Area here from this house. That's where I'm at. I'm at the top of Mount Tiburon here. It looks like it's the highest peak in Tiburon. I don't know that for sure, but when you're just driving around the area, it certainly looks like it probably is the highest. I think it's so cool that Lars used to live right there, and so many of my favorite Metallica songs were probably written in that house. Why on earth you would want to leave a beautiful spot like this, I have no idea, but he doesn't own it anymore. Now, getting into the meat and potatoes, I have a layoff story that everybody needs to hear, because even if you have a job right now and you feel like you have job security, you need to understand what's happening to people who are losing good jobs right now, because there's basically nobody who is safe from potentially losing a job right now. Here's a story about a guy who worked for Accenture, and he was a project manager at the company in Florida. And in November of 2023, he was laid off from his job, and he managed up to 150 developers, architects, software testers, etc. And over the past 21 months, he has had more than 24 interviews, but he hasn't been able to land a new job. And his wife is a stay-at-home mom, which makes things even tougher financially. So he's been doing DoorDash to make money. They have been getting unemployment benefits, and they've even been getting some financial help through family. And the reason I want to bring this up is because it just shows you how fast the financial dynamic can turn around, even when you have a very good job and you think things are secure and going well. And it's also a reminder of why you shouldn't be carrying debt from month to month, and why you should be constantly saving and have an emergency fund of at least 6 months and investing for your future. Because if you ever do find yourself in a situation like this, you're going to be able to withstand it much better than somebody who kind of gets blindsided by it and is living paycheck to paycheck, even on a 6-figure income, which is very common these days. And it's now to the point where these people have fallen behind on their mortgage payments. Now, 21 months is a long time. Don't get me wrong, guys. If you have a 6-month emergency fund, even if they had a 12-month emergency fund, they would have blew through the cash by now, because the guy's been without a job for almost 2 years, which is horrible. And he says he's not even getting interviews anymore. Recently, the job market just seems to be completely dead, which corroborates what I've been telling you here on the channel based on all of the labor market data that we've been going over. But what makes it a particularly tough job market for him is he has a lot of experience in his field, and he expects a high pay. So these high paying jobs with experience are very, very difficult to find right now. He says the first thing that recruiters say when they see his profile is it's very expensive. And obviously companies are in cost-cutting mode right now, so there's not a lot of incentive to hire people that command large salaries. And there's been a lot of news in all the layoff news that we've talked about, how companies are cutting the middlemen. You know, the middle managers are being squeezed out because there's just a lot of redundancy, and these companies are able to save a lot of money by not paying these big salaries. If they had 10 middle managers before, they might be able to cut it down to 3 or 4 and save a significant amount of cash. Big corporations have been doing this, like Microsoft, Google, Intel, Amazon, Walmart. They have all announced plans to reduce the number of managers that they employ. And according to a payroll company called Gusto, they have found out that manager firings and layoffs have risen 66% between January of 2022 and September of 2024 for people who are ages 45 to 54, and more than 400% of an increase in the layoffs if you're between ages of 35 to 44. And this trend is being called the Great Flattening, which reflects a broader push to reduce costs and bureaucracy. So basically, they're just cutting the fat. They don't need so many managers telling everybody what to do. I always think of the Office Space reference, man. That movie still holds so true to this day, You know, you got Peter sitting there telling the Bobs that he has 8 different bosses coming by to tell him what to do today. Like, what kind of job requires you to have 8 different bosses, you know? Come on. But it's such a spoof of how things work in the real world, and a lot of companies are realizing that they can do without a lot of these people. So his job at Accenture paid him $87 an hour, and he's been looking at roles that pay between $65 and $85 an hour, which roughly lands you to earning about $177,000 to $135,000 a year, which I think we could all agree is a pretty good salary. But many recruiters are saying that this number is just too steep for a lot of their clients right now. And the one job that was willing to hire him said that we can only pay you $35 an hour. So imagine going from making $85 an hour to $35 an hour, guys. You're basically taking like a 65% pay cut to do the same job. And I think most people, just out of pride, would not accept a situation like that. Like, if you're going to take that much of a pay cut, you might as well just do something else, right? There's no reason to fill the old role that you had, because what's the incentive to? So basically his target for his job is he doesn't want to get into the same role without making at least 50 bucks an hour. That's kind of like his floor, his threshold of where he's willing to accept. But you're still looking at, what is that, you know, a 40% pay cut, something like that? It's crazy, especially in times of high inflation when life costs more than ever. And you have a stay-at-home mom, wife, that's not helping the situation either. I have nothing against stay-at-home mothers. It's a tough job. I think it's a beautiful thing if you can pull it off, but sometimes you can't in situations like this, and it requires, you know, 2 incomes coming in to make it work, especially if you're falling behind on your mortgage. Because let's face it, there's going to be no home to stay in if you can't pay the mortgage. You end up losing your house to foreclosure, you know? So you got to think like that too. And the job search has been disheartening, just like many of the other stories I've shared with you here on the channel. He says when he finds a job posting that seems like a good fit for him, there are already hundreds of applicants, which makes the chances feel slim to none. I think a lot of people can relate to that. And since there's so many people applying for these jobs, it's very difficult for recruiters to sort through the noise and figure out who's actually a good candidate for any of these jobs. What has he had to do? He's had to expand his search beyond project manager positions to business analyst and sales roles, even applying for a kitchen team member role at Chick-fil-A. He's also trying to increase his knowledge about AI, hopefully be able to land something in that field. But if he could give any advice to anybody struggling to find a job right now, he would say this: don't give up, and look for opportunities to improve your skills while looking for work. That's exactly what I've been telling people here on the channel. So it's good to hear that someone who's experiencing this firsthand agrees with what I'm telling people to do here as well. Here's a house for sale that last sold in March of 2021 for about $6.9 million. And then earlier this year, back in April, they listed it for sale at $8 million. And back in June, they just gave it a $500,000 price cut, and still no takers. That's a clear sign that this house is overpriced and likely is going to have to come down even further, and they'll be lucky if they can even sell this house at a break-even number, which means in the end they lose money. Because if they are able to sell this house for the same $6.9 million that they actually bought the house for, they're going to have closing costs, they're going to have transfer fees, they're going to have taxes, they're going to have real estate agent costs, and in the end they're actually going to take a loss. And that house right there is a reflection of how a lot of the housing market is looking right now. Just as bad as the job market. And speaking of the job market, something else that everybody else needs to hear is that layoffs have risen 140% from 1 year ago, guys. Think about that. Just so far this year, in 2025, companies have already announced more than 800,000 job cuts, which is the highest since the pandemic in 2020. And this is supposed to be the greatest economy ever. We're not supposed to be in a recession right now, but we're seeing 800,000 job cuts in the first half of the year. That is horrible. We're talking pandemic levels of job losses, and no one blinks an eye. Just in July alone, U.S. employers cut over 62,000 jobs, whereas July of 2024, the job cuts were barely under 26,000. According to Challenger, Gray, and Christmas, they found that the biggest impact on job losses this year was the relentless onslaught of AI. which I'm not really surprised because so many companies are turning to AI to save money right now. That's the number one cost-cutting measure a lot of companies are taking, and they're filling a lot of their entry-level roles with AI nowadays. Just in July alone, AI was responsible for over 10,000 job losses. And of course, most jobs have been cut in the tech industry, where over 89,000 people have lost their job in the first 7 months of the year. And this is all due to artificial intelligence. Amazon is also another company that is heavily reducing its workload off to AI for the entry-level positions. And they've been big investors pumping billions of dollars into the AI company Anthropic. And the CEO of Anthropic recently came out and said that AI could wipe out half of all entry-level white-collar jobs. We're talking good jobs that people have gone to college and have gotten 4-year, 6-year, 8-year degrees for. And apparently the demographic that is being hit the hardest with all these job losses and AI takeover has been college graduate males who are between 22 years old and 27 years old with at least a bachelor's degree. And they are now unemployed at the highest rates of the general population. So I don't know what's worse, guys, to be this guy at the beginning where you kind of had it all, you had it made, you had a really good job for a long time, making good money, own a house, things are going good, have a stay-at-home wife, and all of a sudden you're doing DoorDash and applying at Chick-fil-A. I don't know if that's worse, or going to college, possibly going into debt for an education, only to come out to find that there's no job available for you, and you're either on unemployment or working at a fast food restaurant. I don't know. You tell me in the comments which one you think is worse. To me, both situations are horrible. Something else that just happened this week is the 30-year bond auction went really, really bad, and the yields on these 30-year treasuries are spiking. They're going up. On Thursday this week, the Treasury Department sold $25 billion worth of 30-year debt at a yield of 4.813%, which was more than 2 basis points above the yields level at the pre-bidding deadline. And higher rates at auctions signal that demand is weak as the Treasury has to entice investors to buy U.S. debt. Also, demand for the 10-year Treasury was below expectations. And actually, this was the third week in a row of a weak auction, meaning that there was just lower demand for these Treasury notes than usual. Now, the way the law works right now is that primary dealers and banks and lending institutions are obligated to buy up the remaining debt in all Treasury auctions of what doesn't get sold. And this group bought 17.5% of the supply of debt, which is the most since the week of August of 2024. Typically, we sell a lot of our treasuries to foreign investors as well, which include foreign central banks. Well, that number's been on the decline as well. You also have direct bidders, which include domestic institutions like pension funds. They bought 23% of the bonds that were issued, and the foreign bidders bought 59.5% of the bonds issued. So what does this tell us? Well, the weak demand for all three of the auctions that happened this week are signs that investors are not happy with the prices or the yields on these treasury notes. And that's likely due to the fact that people are not seeing the value in them. Who wants to spend, whatever billions of millions of dollars on 30-year treasuries that have a 4.8% interest rate, guys? Especially at the rate of inflation today, I would even argue the real inflation rate is probably higher than that. And these rates aren't even beating inflation. And these bond investors know that. That's why they're not buying them up. That's why the yields are going to have to continue to go up. And this is something I've discussed on the channel in regards to the Fed lowering interest rates, because there's a lot of pressure on Jerome Powell and the Federal Reserve to lower interest rates by the Trump administration. And if they do that, then these yields are going to have to go even higher, most likely. Because what essentially the Federal Reserve will be doing is they'll be committing to higher inflation for longer, rather than squashing it back down to 2% like they promised they would 3 years ago, which we haven't seen materialize. So if you're an investor in these treasuries and you know for a fact that inflation is going to be an ongoing problem and is going to be a bigger problem than what's being talked about and being promised, wouldn't you want to get a higher return on your investment for trading your hard-earned money? Of course you would. That's exactly what we're seeing happen right now. And this is all leading us to a scenario where we could be looking at stagflation, which is kind of the worst case scenario for any economy. And stagflation is a scenario where inflation continues to rise while economic growth slows down and unemployment spikes. And we're actually seeing all of those things happen right now. The economic slowdown is real. We know that from looking at the labor market, especially. We saw unemployment tick up a little bit during the last reading. At the same time, inflation has been going back up. And this is before the Fed is doing further rate cuts. And the real problem with stagflation is the Fed or the government can't really do anything to solve it because the tools that they have in their toolbox always equate to the same thing. It's lower or raising interest rates. It's quantitative easing and injecting more money into the economy. You know, that's pretty much all they do. And that stuff doesn't work during periods of stagflation. The PCE, which is the personal consumption expenditure, this is the inflation index that the Fed looks at, their preferred measure of inflation. It rose 2.6% year over year in June, above the 2.5% year over year increase that they were expecting. And it was also an increase from May's 2.4%. So inflation is going back up. And the PCE is typically the lowest measure of inflation that they can find and get their hands on. And the Fed loves it for that reason, because it makes the numbers look better than they really are. But you ask any Joe on the street and they will tell you that inflation is certainly higher than 2.6%. So you could argue that we are already in a mild version of stagflation right now. The question is, will it get worse? Are the policies that are going to be pushed into play over the next 6 months to a year going to exacerbate the problem, or is it going to solve the problem? Well, my money and my guess is on it exacerbating the problem, because that's what the government does best, right? They love making a bad situation worse. You know, we're seeing the job market slowing down right now. That's what we talked about for the first half of this video. We saw that major revision of 258,000 jobs that were never created, which is a huge blow to the current administration. We have prices for services starting to move higher. The Institute for Supply Management Services Price Index, which is a measure of how much Americans paid for services, rose to 69.9%, up from 67.5% in June. And that marks the 98th month in a row that service sector prices have increased. And it's also the highest index reading since October of 2022, when inflation was still spiking back then. 2022 was the worst official year on record of inflation when it got up over 9%. So we're seeing inflation on the service sector of the economy continue to go up with no signs of slowing down, which is going to help influence that headline number that the Fed likes to look at. And at the same time, we have employment growth slowing down and unemployment going up. It's not a good combination, guys. Because we also have more Americans filing unemployment claims. Initial job losses surged to 226,000 people in the week ending August 2nd, according to the Department of Labor. That was slightly above what they were expecting. And meanwhile, continuing claims, which is the number of Americans filing a repeat application for unemployment benefits, rose to 1.97 million, and that's the highest number of recurring applications that the U.S. has seen since the pandemic. So this is starting to get real. Everybody who keeps telling you that things aren't that bad and unemployment's not really a major problem, well, it looks like it's about to become a bigger and bigger problem, especially since people, like we talked about at the beginning of this video, don't have a whole lot of other options or opportunities right now to replace their high-paying job. And that goes back to what I was saying at the beginning of this video. I think everybody needs to hear this. Everybody needs to understand what's happening and how vulnerable you could potentially be in this environment. No matter how safe you think your job is, you might be surprised. And it's a reminder to live below your means and to save for a rainy day, because you might have rainy years, just like the guy at the beginning, you know, almost 2 years without a job, doing gig work in the meantime to try to fill the gaps. falling behind on mortgage payments. Who wants that? And it's also a reminder that nothing is promised in this life. You know, you can have things set up a certain way and have a very well-oiled machine and things are going great. And all of a sudden, a job loss or an illness or an unexpected emergency can flip all that upside down. And I think it's important to share stories like this so people, number one, don't take for granted what they have and are appreciative of what they have right now, but also puts people on notice that nothing is guaranteed and things can turn around at the drop of a hat. And when the economy starts getting shaky like this, the possibility of something like that happening goes up exponentially. And the worst part is, you really haven't seen anything yet, guys. I know that's a very cliche saying, but it's true because we're not even officially in a recession yet. The Fed is not worried about the labor market or unemployment, okay? We have an administration that keeps saying that this is the greatest economy ever and that we're getting rich off of tariffs. So nobody seems to really care or acknowledge that we have major problems right now that are not going to be solved. And what the government does and how they handle it is they always wait until it's a major problem and then they decide to act. But of course, by then, it's far too late and most of the damage has already been done. So let's keep an eye on this together, see what happens. You guys let me know what you're seeing happen in your job market and your job search down in the comments below. And if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.